Hey traders, Nurse Gringo again, and if you're serious about mastering intraday trading, I'm going to introduce to you a strategy that changed the game for me, and I called it Pulsepoint. This is the strategy that I'm going to share to you on my upcoming free course here in my YouTube channel and on my Facebook page, the Pulsepoint Trader. This is not your typical cookie cutter setup. Pulsepoint is a momentum-based strategy rooted in a real price behavior, and it's built on three powerful pillars. And at its core, the strategy is momentum-driven intraday strategy that revolves around three key elements. Number one is market structure, liquidity zones, and time-based precision. Everything starts with market structure. Understanding how price moves, shifts, and transitions between phases. Then we identify liquidity zones where orders are sitting and price reacts sharply. And finally, we fine-tune everything using time-based precision. This means trading during the right session at the right moment when volume and volatility align. Now, before I dive deeper, let me be real with you. I didn't just wake up one day with Pulsepoint figured out. I went through what most of you probably have: strategy hopping. I tried support and resistance, moving averages, trend lines, supplies and demand, SMC or smart money concept, and ICT, you name it. I tried it all. And the truth is, they all work, every one of them, but only if you can execute them consistently. Now, the Pulsepoint strategy is kind of like Jeet Kune Do or Bruce Lee's martial arts philosophy. He took what worked from every style and made it his own. And that's what I've done here. While the base concept of Pulsepoint is inspired by ICT, that is Michael Huddlestone's smart money concepts, this isn't copy-paste of ICT. I've distilled what actually works in live markets and blended it with timing, momentum, and entry precision. Maybe we can say my own ICT model or whatever. But if you've tried learning ICT on your own, you already know it takes 2 to 3 years to fully grasp and apply the concept. What I'm giving you with Pulsepoint is a shortcut, my personalized framework that lets you trade ICT principles with the support of multiple strategies without the fluff. It's application of all useful and proven strategy in trading. But the hard truth is, strategy alone won't make you profitable. You need these three most important things. Number one, a solid strategy, of course. Number two, to control your emotion, discipline, or psychology. Number three is practice, because execution is where the money is made. You need to practice your strategy. All right, let me show to you a live example of how I applied my Pulsepoint strategies to yesterday. What time is now? Earlier during the New York session market. Let's go and I will share that to you. Okay, guys. So I'm going to walk you through the trade that I took earlier during New York session, where I have this 2008.60 profit on my 150 funded evaluation account under Top Step. As I've mentioned earlier, Pulsepoint is a momentum-based intraday trading built on the three key pillars, right? The market structure, liquidity zones, time-based precision. So let's go to TradingView for more. So every day I started with a full top-down analysis. That means I go from monthly to weekly, daily, and down to 4 hours time frame, mapping out all the key liquidity zones and analyzing market structures. So the higher time frames always have more influence, so I make sure to map them all, map everything, like the monthly, weekly, daily liquidity. So I'm just mapping or labeling the liquidity. So if you are a beginner, most likely you won't be able to follow. You won't be able to, you won't be able to understand what I'm saying, or what are the terminologies that I'm using here. Medyo mahirapan kayo, but I think if you are advanced, or you already know about ICT concept, it's easy for you. But don't worry, to those beginners who's listening or who's watching these videos. I'm going to post videos discussing all of the basics that you need to know in order for you to apply the strategy that I'm sharing to you. The base of my analysis, the concept that I've used for me to easily understand the market, give meaning to why the market reacts or behave that way, is I use ICT concept because it gives me clear understanding of the market structure using the ICT concept. All right. Now here, to get the bigger picture, I told you I use basic tools. ICT concept plus the basic tools like support and resistance, trend lines, para ma-define ko yung structure and to know where is the market heading. Here, on a daily time frame, I started on a daily time frame analyzing my bias. So here, you don't need really fancy analysis. It's easy to understand that the market is going up, right? Starting nagsimula siya ng April. So April, market starting to go bull. But that bullish momentum, we have low here, lower high, lower low, and then we have a strong bullish momentum. Tapos huminto siya dito, okay? Why? Because this is a higher time frame liquidity in the form of daily fair value gap. You see this gap here. This gap here is a daily fair value gap. So there's a resting orders liquidities there that cause this price to pull back here. So it's easy to understand, right? So right now on a daily time frame we are bullish market. So now let's go to the 4 hours time frame. But you already noticed, right, that I mark all the liquidities monthly. I mentioned that already, right? I mark everything: February, March low, April low, a weekly low, weekly low, weekly high, daily low, daily high, daily high. So all of the highs and lows of monthly to daily, I mark it all because that is a resting liquidities. Those are untap liquidities. So lahat ng mga hindi pa na-tap, okay? Now, let's go to the 4 hours time frame. On a 4 hours time frame, this is where I map or draw my internal liquidity. Kasi ang price action always moves. It always moves from internal liquidity to external liquidity. External liquidity to internal liquidity. I'll give you an example. This is an easy example here is, let me see. Actually, this one is easy example. You see, market goes up, sweeping all of the liquidities in here. This is a external liquidity, and going back here, and this 4 hours fair value gap is internal liquidity, and then go up again, something like that. We will learn this, okay? I will explain this to you. I will walk you through all of these things. Now, kahapon, that was on May 7. May 7, that was here, yeah. I started mapping all of this yesterday because I'm preparing for today's market. I'm preparing to trade for today's market. So yesterday, after the market closed, I was expecting actually that on today's market, the price will break this daily fair value gap to take this weekly high, and then after that, we will have some pullback. So I'm just predicting that, but we don't trade based on prediction. On the Pulsepoint strategy, we are a reactive trader. We trade based on how the market reacts, or how the market reacts to a certain liquidity or certain key point. So that's how the strategy actually, how you apply the strategy. You mark your key points, you mark your liquidity, and then once the price reaches that liquidity, that's the time you will find an entry. So a bias actually really doesn't matter, but on a higher time frame. But on a lower time frame, you need to know where's the market heading on a lower time frame? Is the price is going to the external liquidity, or is the price is going to the internal liquidity? So that will help you get a high probability setup. But that is a discussion for that is another video. I'll discuss that on another video. So here, susundan nyo lang. You just follow the market. Okay. So on May 4th, we have this bull momentum hitting this daily fair value gap, and we retrace here on May 6th on this fair value gap, testing this value gap. We tested this fair value gap twice already, and then again, went up again, hitting some liquidity here, a minor liquidity here, or some, and then went back again to test this fair value gap. But this time, that was on New York PM yesterday. Not only tested this fair value gap again, but at the same time sweep an strong internal liquidity in the form of this equal lows, equal high. You see, equal lows and equal high. And just to add up, some was still not breaking this trend. You see, it just create another trend. So this is just still, we are still on a bullish market trend. So we don't have a market structure shift yet. So in order for me to tell that the market the market is going bearish is if I have a confirmed market structure shape on a 4 hours time frame, and maybe I will if that happen, and then my bias will be bearish. If for example, if the price will break here and close below this fair value gap, that is a confirmed market structure shift on a higher time frame or on a 4 hours time frame. And if that happened, then I'll say, okay, I'm looking to sell now, maybe targeting this weekly low, or maybe targeting this gap here, this gap. And this is when was this? Yeah, this something like that. So gap. Let's go to, so as you know, the third key pillars is time-based precision. So hindi tayo nagtitrade if not on a right time. And for me, the best time to trade during New York session is from 10 a.m. to 4 p.m. But my strategy, Pulsepoint strategy, work best from 10 a.m. to 12. This is where we look for an entry. And if we have a confirmed setup, right? I will open my chart and observe at 9 o'clock. So, punta tayo sa 9 o'clock. Let's go to the 9 o'clock. Let's forward this. Oh, way too advanced actually. Let's see, like that. Let's go to 15 minutes time frame. 15 minutes time frame. This is for tomorrow. Okay, I'll keep it there because that's for tomorrow. So, there's my 9:30. This is regular trading hours, and then 10 a.m. we'll start hunting, right? So like that. Okay. This is 9:30 and 9 o'clock. Ganyan yung market earlier. So this is the market earlier. Go to on a 15 minutes. We already have our liquidity key point. My key point here on a higher time frame, I said if the price will go up, break this daily high, and we will have a reaction or a rejection going down. My target after that reaction is to enter the market once the price will go back and retest this daily fair value gap, or retest this one here. This is an order block. That is my initial plan. If the market will go up, break this level, break this 4 hours order block here. My initial plan actually, while observing the market, I thought the market will go up. I thought the market will continue to go up and then go back to retest this order block, and then go up again to take the weekly high. That was my prediction, but of course we're not trading based on prediction. I said if that happens, and then I will buy once the price will retest this, or I will buy maybe if the price will continue to go up and take this weekly high, because it will create a reaction, of course. Any pullback after taking this weekly high, and then I will sell targeting any form of internal liquidity that will be created. That was my plan. But what happened was we had President Trump speech today, which caused the market to spike and become unpredictable. Instead of rushing in, actually, I stayed patient and watched the volatility play out and waited for the confirmation of my entry once the speech is ended. Let's go to 5 minutes. Now we already have that that plan ahead, but because of the speech and then seeing the market is trending down like this on a 15 minutes time frame, and even on a 1 minute time frame, on a higher time frame, I said I think after the speech, since President Trump's speech causing the market to go down, and I saw this internal liquidity here in the form of 1 hour fair value gap, 1 hour bullish fair value gap, and not only this thing is a fair value gap, it's a 1 hour fair value, because this is a strong support. It's a strong support. This fair value is strong support because why this is strong support? On a 4 hours time frame, that fair value gap is just right above on 4 hours breaker 4 hours previous 4 hours order block. This order block here still valid. It's not a breaker block, still an order block for me, because this candle here didn't close below this low, so meaning this is still valid 4 hours order block. I'm just walking you through how I analyze the market. I said I will wait for the market to sweep this liquidity here, or tap this fair value gap here before deciding to enter the market, or before I will look for an entry. And then let's see on a 5 minutes time frame. So President Trump's speech, actually he was late. Nagumpisa siya around 10 a.m. na. I know that the market will go down, but the reason why I don't want to sell this price action is because it's not my strategy, or it's not my key points. It's not my plan. It's not the setup that I'm looking for. I can sell this, but I'm not sure I'm not sure about the probability of the trade, because we don't know. This is during the news, at the same time during President Trump's speech. I will let Trump finish his speech, and after that I will enter the market. I waited for him to finish, just doing nothing, observing price action, and then you see this trend. When I saw this trend, okay, I said I will use trend line, because this is a beautiful trend. I used trend line here. I started at 9:30. I started my trend here at 9:30 or 9:20. 9:30 actually, just the opening, when the regular trading hours open. I started my trend line there. You see, I'm using ICT, but I'm still utilizing trend line, because they all works, and it helps me analyze the market. Why I used the trend line here? Because if this price will break this trend line, then I will buy. If I will see my setup, I will buy. This is one of my confirmation or confluence that the market will go up, because I'm pretty sure, I'm 90% or 80% that the market will not go down. At the same time, while I'm listening to President Trump's speech, everything he said, lahat ng mga sinabi niya dun is positive about the market. It is all positive. I talked to the Prime Minister of the United Kingdom, and they had a beautiful conversation, beautiful for the market, beautiful for the economy. So I said, okay, there's no reason that the price will go down further. So I think this strong support here in the form of 1 hour fair value gap will support the market, and I I know there are many liquidity here. Many will buy here because this is a fair value gap. This is a fair value price. So people will jump in and buy the market once President Trump finishes his speech. So now here, so natapos siya magsalita at around 11. The speech was done at around 11. The news at 8:30 had its effect already. So I said, okay, I'm going to start hunting for my setup. So my setup that I will discuss to you also on my upcoming video is a part of the Pulsepoint strategy. Is an ICT setup or ICT entry model. So we we have a confirmed sweep of liquidity. The price is sweep of liquidity on the form of 1 hour fair value gap, and the fair value gap is starting to reject. The buyer is starting to rush in. We have these two green candles, good rejection here, meaning buyer starting to gain control. So I mark this bearish fair 1 hour 1 minute. I mark this 1 minute fair value gap, bearish fair value gap, and I said if ma-inverse tong bearish fair value gap, if the price will close above this inversion fair value gap, and then create a market structure shift, we will have a market structure shift here, and the price will break this trend. This additional strong additional confirmation that the the market will go up. And I said if that happens, I will go long here, put my stop loss here, and I will target this. Where was that? I'll target this 1 hour fair value, 1 hour order block here. We have an order block here. I said, okay, I'll target that 1 hour order block. That was the plan. That was a plan. I waited for my moment. See, we have good. We're holding this. We have a good support here. We're not breaking this low here. We're not inversing this 1 hour bullish fair value gap. And then I saw this one here. Said, oh, we have a bullish fair value gap. 1 minute bullish fair value gap. Bullish fair value gap. And there, the candle closed above the trend line, above the inversion fair value gap, and this is where I enter the market. I buy the market, I put my stop loss here, and I targeted this. Actually, my plan was to target this one, but I said, okay, I will just target. I will just target this. This is where I target this. I just target this one. I targeted this one. I said, I know that the price will go up and break this, but we're not 100% sure. The safe TP for me was here, and I said this is 2000. I said I'm good with that. And then this what happened. Boom. I hit my take profit within how many minutes? I started from here. Within 15 minutes. Within 15 minutes. I have my TP. And that's because I don't know how I did that. It's because of the strategy, because of the ICT concept analysis, and because I just follow my discipline, not doing any trade unless I will hit my key points or my point of interest, and then until my strategy will show up or my entry setup will show up, and that's the time I will enter the market. This is how you apply uh, pulse point. This is how you apply it. It's it's easy once you know it's okay. This trade was perfect example of how my pulse point combines with the smart money concept, macro awareness analysis, timing precision into unified model. If you're serious about learning how to read the market like this, follow me, hit the subscribe, and stay tuned for more breakdowns like this. Soon I'll be doing live trade here in the Facebook. See you next time.